Last up, we have Capital and Counties Properties, or Capco. It's a London property company with two key assets focused on Earls Court and Covent Garden. It has a market cap of 46.5 billion rand, a PE ratio of 5.5 and a dividend yield of 0.62%. So I don't know if you've been to London recently. I actually went in October last year for the Rugby World Cup, and I actually went to both Covent Garden and Earls Court. Absolutely cooking. People everywhere, shopping, Apple stores. You get the feeling that it's a very healthy environment. London property has been a hot spot for a long time. On the back of Brexit, are things changing?
Again, things are changing, and I mean, I lived in London for 3.5 years, so I know both areas as well. I mean, if you look at something like Earls Court, it's not quite Chelsea or Kensington, but it's close. It's getting there. I mean, the property prices are a lot cheaper, but looking at it, it's interesting because this is definitely one that should be hit incredibly hard, but has been hit. I mean, the first day after Brexit, I think we lost 17%, down again another 13 at the moment, and it starts to become, at what point is this overdone? That's kind of what you're looking for. At what point will the panic subside and people will sit back and go, wait a minute, this was already down 30%, and a lot of this looked like it was priced in even for a Brexit, before we got the surprise vote, and now it's absolute slaughter. So, how's the saying go? When there's blood on the streets, you buy property. And I mean, when you're looking at what's happening in London, I mean, you look at the two different assets. I mean, obviously the Covent Garden asset is more their rental assets. I mean, they develop a good cash flows from that. But the Earls Court asset is more of a development asset. Now, again, it's an interesting question because, like you say, London, it's alive. There's a lot of excitement around those areas, but again, the property prices are absolutely sky high there at the moment. Now,
sorry, I'm going to have to cut you short there because we're running out of time. So, are we going to be hot or not on this one? Are we taking advantage of this big pullback, as we can see from the share price?
I think you can. I think don't catch the falling knife, but wait for a little bit of support. And I think just because of the difficulty with which these assets can't be replicated. The London has been around since Roman times. I mean, it used to be Londinium.
And they've always protected property rights.
It's property rights are not going to disappear in the UK anytime soon. This is scarce property. In central London there is not an oversupply of property. So you're going to be hot on that one. I don't. In the face of an absolute share price collapse, I think wait for it to find some support. But you can still be buying it.
Yeah, I think out of the lot, this is the one I find least attractive. So I'm going to be not hot. Maybe they can use some of their cash flows and buy some property in Dublin.